Welcome, Jumbo Nation. Welcome to this week's midweek spectacular, the Hump Day Holla, where we get you education and options when it comes to your most valuable asset, your home. And today, the whole goal of Mortgage Gumbo is to provide education and options to consumers, to homeowners, to first time buyers on your most valuable asset, which is your home. And from time to time, there's always, every single day, there's different things out there. And there's a lot of stuff that is headline news that we make sure James and I clear up at every single opportunity that we get. And today's one of those days that, one of the biggest things, and you talk about sparking a debate. And want to welcome James Parker to the show. James, appreciate you being with us today, man. As this podcast today is a little bit different, just because, I think we get out news all the time, but this is one of those things, kind of like when we broke down the bank, the Silicon Valley Bank, when we broke that down, right? I think when we're looking at this stuff now, when you look, this is a hot topic. So headlines have come out of a mortgage fee tax, whatever, going into effect May 1st. And our goal, James, at Mortgage Gumbo is to always provide education and options, right? And today is going to be that education piece. And what I'm amazed by is I've had so many realtors, current clients, future clients, overall just listeners, family members, calling, going, what is going on? How is this going to affect my current rate? So I know we talked about it at length on Saturday, but I thought it was important, James, that we sort of break down really what is going on. And the purpose of today is this is a big deal. This is a huge change. Let's not discount it, but also want to make sure that you understand sort of the how, the why, and then really what's the next steps? Because I know we've gotten questions that we're going to answer. So there's just a lot that's going on with this. So, hey, by the end of this podcast, you're going to know how, why, what is the effect of all this. So
we'll start with the baseline. We got to cover the foundation that we did on Saturday for the people who we can't assume everyone watching saw the Saturday show. So
right.
What are the changes?
So let's talk. I'll kick it off to you. I want to hear your opinion on the how. How did this get into place in your opinion? And then I'll kind of add on to that if you don't knock it out the park, which you normally do anyway.
Well, there's two reasons politicians do anything. And I know this didn't go through Congress and the Senate and was signed by the president. And it was just some mid-level bureaucrat who filled out a form differently. And now the rules have changed. But there's only two reasons why a political act like this could or would happen. Number one, it pays off some cronies or some donors or some connected people or some family members or some, special interests is the umbrella term they like to use in DC. The other one is, does it get you votes? Well, in this one, it does a little bit of both. It does give you something that you can go brag about. Hey, for lower income people, this is what I did to help you. This was me trying to help the least among us reach the American dream, and it sells well. And on paper, it certainly does. And then the other thing is, well, does this help any connected special interests? Does this help big corporations or big banks or Wall Street? Absolutely. It gives them an excuse to go write up more mortgages, whether or not the people can afford it. They're going to turn around and sell it to a GSC on the back end, a Fannie or Freddie, and make their profits and not have to worry about if the whole thing collapses. That's going to be the taxpayers holding that bag, not them. And it's sort of the same thing we saw with the fog of mirror loans rolling right up into 2008 where they just can we just have an excuse to write more loans? It doesn't matter how bad they are because we're not going to be the ones that have to pay the price if it collapses. That's going to be the taxpayer. So there's no incentive for them to write good loans. They just need to write loans that they can turn around and sell on the secondary market. And as long as there's a Fannie or Freddie there to backstop it, they don't care how ridiculous the not the rates, but the qualification rules can be. And so the political calculation is pretty easy. It does get you votes. It does pay off some politically connected special interests. You know, the biggest donors to the political parties are Wall Street and academia. So this pays off one of them for sure.
So good points there. And I agree with everything you said. But just to kind of add on to that, nobody, no business owner out there, when we start talking about fees that we're talking about here, no business, and these fees are in what's called LLPAs, and that's loan level price adjustments. And we're going to get into that in 1 second. Well, a few seconds. So, my thing on the how we got here is no business opens up every day, opens their doors and says, hey, let's go break even today, team. Right? So, any business out there has a fee. Now, who's controlling this? This is Fannie and Freddie. So, like you mentioned, these are GSEs. These are government service entities. Who do government service entities report to? The Federal Housing Finance Association. Biden, the president, right? These are government service entities. So, when you kind of switch from the how did this happen to the why, this is all about, you mentioned votes, and this is where you got to get out and vote, number one, but it sounds good to say affordable home ownership. Let's promote affordable home ownership. Sounds great, James, right? I mean, it's just sounds amazing, doesn't it? As if we're not trying to help everybody. I know here at Mortgage Gumbo become homeowners, but we want to provide affordable home ownership.
So how frustrating is that when they say, you know, this is all about promoting affordable home ownership when they're putting people in homes that they are less able to afford?
Well, but we're going to get into that. And yes, in a nutshell, and as we get into this, I want to say, in quotes, it stinks what they've done. Period. It stinks. Don't like it. Think it's hogwash. But at the end of the day, I want you after this to kind of understand what they did. Right now, you go, you know, hey, you know, why the headlines are people with better credit are getting penalized more than people with lower credit. And we're going to show a heat map, not right now, but in a second, right? And that statement is not 100% true. What they've done is they've always charged people for lower credit and more down payment, less down payment. But what they've done is they've closed the gap on those who go out and pay their bills on time and do all those things that you're supposed to do. They've now sort of penalized those folks, which is where the frustration is and the folks calling come in. So our whole goal here is going to be to really sort of break this down. But that's the why. Fannie and Freddie, they want to try to promote more affordable housing. Now, we talk about on Mortgage Gumbo all the time, down payment assistance programs, rural development. That's an affordable housing program that now a family of four or less can make 120 grand. So it ain't about affordable. It's them owning more. And guess what? The more, like you said, this is these government service entities, now that they pay back to the government, this is a moneymaker now. It's a business. These used to be things that were checks and balances that kind of bought and you sold to them. Now they're all in. And I get it, and that's fine. And that's a reason why, listen, these same people that everybody's bashing right now, and I agree with you, not one person was calling going, hey, I don't like this 2.5%, 3% rate I'm getting right now because Fannie and Freddie are buying all these loans when we all thought the world was coming to an end in 20 and 21 with COVID, with the pandemic in place. So that's what I want you as listeners and Gumbo Nation to sort of understand. You got to take the good with the bad. Okay? So now let's get into what are these LLPAs and really what are these things that are being done? And you know, when you look at this, and I want folks to understand a low level price adjustments, it's a feature that makes up your payment or your interest rate. A loan level price adjustment, look at it as a feature. It's like when you go to buy a car, right? When you go to buy a car, you go look at all the things that are listed out for you for that car. AC, upgraded wheels, beautiful speaker system, upgraded speakers, heated seats. Look at that as an LLPA. But what this is done now is this is now they've lifted up the hood by making this a national headline, James. They've lifted the hood and said, you're buying a loan, and now they're basically telling you as part of your interest rate, there's these LLPAs. You know what LLPAs are on loans, folks? We just kind of talked about cars, credit score, down payment, or that's two of your most popular ones. But other ones are, or you're buying a condo, or you're buying a double, or you're buying a townhome. Is it an investment property, a primary residence, a second home? So there's a lot of LLPAs, which are features that make up your interest rate that you get. James, am I doing a good job of trying to, because I want to make sure I'm breaking it down where people, and I thought explaining like when everybody here went and bought a car and sees all the features listed on the side of the window, they see all those things. So I want people to understand that's what because if you don't know what an LLPA is and you just read the headline, you're like, oh, I'm getting jammed up.
Okay, so I like the car metaphor here. And if you took the basic model of a car, the manufacturer's suggested retail price is the base lowest price. That's the one they put in the commercial because that's going to be the lowest and get you there.
Right.
But the line level price adjustments, or what is it, loan level price adjustments or whatever?
Loan level pricing adjustments, correct.
So that's the feature. So what we have here, I guess, what would be the MSRP, the LIBOR rate or whatever the basic rate that?
Yeah, I mean, yeah. Well, your MSRP would basically be you're not your LIBOR, but let's just say your APR, right? You have a interest rate, but then you have your APR.
All right. So
which includes all your fees, right? You might come to me and get a 6% rate, but your APR might be 6.125. Your loan payment's based on your 6% rate, but your APR includes fees, and by law, you've got to have that.
All right. So under normal conditions, like when we do the rate watch, and you see that just for an example, that's not what it is right now, but a 30-year mortgage is at 6%. Well, okay, we start at 6%, but we come in, and if you have good credit, maybe that goes down a little bit. If you have bad credit, maybe it goes up a little bit, but that's what the LLPA is.
But you would never know that, because what's going to happen, James, the client's going to fill out an application. We're going to run their credit. And they're going to tell me, I want to buy the house, to use your example for this week, I want to buy the house next door to me. All right, well, when we do that, all part of that application, those LLPAs are taken down when I click a box that says investment property. When your credit fills in and it's a 720, right? Now all those LLPAs and now you might get, when you're a 760 on the rate, we'll give you a plus. So it might wipe out the investment property or something, right? It might wipe out one of the other ones and kind of even out. So that is what the LLPAs are.
Okay, and so now what we've seen here, the actual tweaks that are coming, the headlines are from how much and how little these LLPAs will affect you. And so it used to affect you a little bit more for good credit, and they scaled that back. You still do get a better rate if you have good credit. It's just not as generous as it was or will be after May 1st. And that when these
So let's kind of pull up that heat map, because
yeah,
I
this
think,
is everything actually. This really helps me understand.
yeah, I
Understand it.
want folks to be able to see this, right? So can you put it in the middle? Can remove that hump day holla part maybe for folks if they're watching it on their phone. All right, so when you look at this, this is for a purchase loan, right? So this gives you an idea when you're getting an interest rate. See, this isn't your interest rate isn't 1.25%. Your interest rate isn't, um, you know, this is the little bit of factors that go into making up your interest rate that then gives you your payment. Okay. So, what I want folks to understand here is this is what you're looking at here now is people with better credit. You go to the car lot right now, you don't have the option to not get the uh, upgraded sound system. It's automatically being put in the car.
Yeah, and for those of you whose text is too small to read, over here in this column is your FICO credit score.
Right.
And then in the row at the top, that's the loan to value. But that's just the size of the down payment, right? Isn't that the fancy word for how much you're
Correct.
putting down?
Right. So,
Right.
what are the things we've been talking about for a year? Cash is king, right? And this heat map just backs up why we've been telling folks less is more, especially in a higher rate environment, which we've been in since last June. Okay. And this sort of shows you, right? So if you look at that heat map, look at it when you look at putting down less money, no matter what your credit score is. This is what's crazy. Take whatever FICO you got on the left side. If you put down 90 to 95%, you're getting a better break on your rate than you are at 85 to 90%. Not one of those is it, do you pay more when you put down less? So, and I know we've got questions we're going to get to, but you've got to understand how to win in this environment. So while I've got this up, let's look at an example here. Let's take it because all the national news, everybody's out there talking about $400,000 houses, right? All right, let's take a $250,000 house. In this market, that's kind of the median, okay? So on a $250,000 house, James, on a client that is a 660 to a 679 credit score, you can see if they put down 5% or less, what is that percentage there on that heat map? 1.25, right?
Yeah, that's pretty small on my screen, but I got you 1.25.
So on a 660 credit score, 250 loan amount, again, this isn't your rate, but towards your rate in your payment, $31 is going towards your payment to make up your mix of payment. Okay. Now, let's move up that same chart, but let's go to our buyer that is a 720 score. Well, James, tell me, is 70.75 less than 1.25?
Yes, and significantly so.
So, when we say these headlines, people with better credit are paying more, all they've done is what they mean is they've shortened the gap or lessened the gap between a lower FICO borrower and a higher. Because that 720 borrower, when you compare them to the 660 borrower, only $18.75 is going towards their payment. Versus the 660, $31. So, Gumbo Nation, I want you to understand. Yes, it sucks. Yes, it does stink. But we've had lots of people ask, Hey, Dwayne, you do a great job of helping us fix our credit all the time. Can you show us how to lower your credit? Well, no, but here's where the benefit of working with Mortgage Gumbo comes into play. Because now we're not order takers, James, right? We hear the success stories all the time of how somebody was turned down because somebody didn't know, James. So we go get their credit score up by 5 points by switching some debt around or paying off a small credit card or something like that. Well, now, look, it's even more important that you're working with a lender that looks after you or realtors that looks after your client. Because now, James, if I can get that person from a 680 to a 699 that's putting down 5%, and I could show them how to get to a 720, well, James, I just saved them 50 basis points. So now more than ever, and while I think this stinks, here's what this is going to do for home buyers. This is going to help you. You're going to be forced to work with people that have your best interest at heart. Because for people who just sell, rate, and order take, they're not going to know how to help you out. At Mortgage Gumbo and Snap Send and Save, we are. And we've been doing this, James, since we rolled this out, and since last June, we've been putting these things into play. So for us, it lines up with our ideals of cash is king and doing those type of things. But as a whole, yes, it does stink, but those headlines are a little bit misleading when it says borrower with higher credit to pay more than somebody with lower credit. We just showed you they're not. What they've done is they've lessened the gap of the credit that you used to get when you're coming up with your LLPA, so to speak.
All right. This message from Beth on the Facebook. Can you answer that one? So the percentages in the boxes are basis points.
Yes, basis points, correct. Yes, that is not interest rate. If I was sitting here giving out 1.25% rates, Beth, we'd be doing this from Tahiti. But yes, that is a great question. So that is all, again, not most. I kind of like this because for most people who don't know how to have a conversation, James, with their client and who don't care about their client, and the client calls, I want to buy a house, and they jam them with a rate, I know how to break this down. This is why I know when I'm telling somebody and they call me and go, I want to buy 3 points right now. This is where I know how to tell them, no, here's why. But now what's happened is everybody's getting a look under the hood. You never ever cared. When you go buy a car, how many people, and even if you do look under the hood and you open the hood up, how many people know what they're looking at? What this is doing is this is allowing you to look under the hood. So let's not take this as, again, it sucks, period. But let's look at the forest through the trees here and understand that you're not going to now get some piece of paper what's the alternative? I'll show you, because for $18.75, I won't buy a home. Right? So.
Okay, a couple of questions. We did this on Saturday, and some of the people that watch it not in real time will leave comments while they're watching it. And you did answer this on the show Saturday, but since more than one person asked, let's address it here. The number one question we got: should I now lower my credit score in order to get a better rate under these rules?
Absolutely not. No, you do not want to lower your credit score to get a better rate. So hold off on all the folks right now who are thinking, hey, I'm going to start skipping some payments, right? Hold off. Don't go there. No, you absolutely do not want to do that. We just showed you how, while there's some differences and you're paying a little bit more, you're still paying less than you would with a lower credit score.
All right, another question from the comments section after Saturday's show. Someone asks, is this just within your company or is this industry-wide?
This is industry-wide. This is across the board. So this is if you are selling Fannie or Freddie Mac loans, Fannie Mae or Freddie loans, this affects you. Now, this may not affect some independent or something like that. But guess what? Their rates are higher than what our rates are anyway, so it's irrelevant.
Another question that was asked in about 3 different ways, but the general tenor was, can these changes be avoided? Is there a workaround, is how it's also worded?
Yes, absolutely. I mean, at Mortgage Gumbo, we have programs where we can avoid this. So, yes, they can be. And we just kind of talked about it. I'm going to help you lessen these by looking at your credit, by looking at what does the down payment difference make for you, right? So, yes. And then we also have the programs where we can sell direct to Fannie and Freddie, and we don't have to charge these. So, again, realtors, who are you working with? If you're truly looking out for your buyer, and if you truly are out there trying to make sure that they get taken care of, make sure they're working with somebody that has options that can get around this. Because our whole goal is to make a loan to anybody, which is why we have some of the programs where, yeah, we can get around this.
And another question, is this going to cause my current loan to go up?
No, it is not. I got 100 calls on this so far. No, it is not. Your current loan is a fixed rate mortgage. Now, will there be factors if you refinance in a year? Who knows? Who knows what other LLPAs may come about, right? They happen, I don't want to say all the time, but they're always changing them. This is because we're in a political environment. Look, regardless if you're conservative or not, they're putting Biden's name all over this, right? Because they're trying to make it look bad. And it does stink. But this is being kind of put under a microscope or a magnifying glass for political reasons. But no, you definitely, it will not change your current rate or your current home that you've got. If you've got a fixed rate mortgage, which is what we do here at Mortgage Gumbo. James, that was a lot. Gumbo Nation, I hope you appreciate that. That is the breakdown of everything that is going on with this. I've got so many realtors, everybody calling, going, what is this? Hey, if you've got any questions, go to mortgagegumbo.com or shoot me an email to info@mortgagegumbo.com. Hey, we'll see you Saturday. We're going to talk about existing home sales and why the market is heating up. We told you this was happening. And James and I have nailed it. Till Saturday, Gumbo Nation. Keep stirring the pot.